So Andrew, have you ever left a company and also left a 401k with that company when you left that particular company?
Yes, I have.
And what did you decide to do with the 401k?
I decided to roll it over.
Okay, so who helped you with that matter?
You did, because I had no clue what to do.
And I wanted to share that information simply because, Andrew, you were fortunate enough to have someone at your beck and call to help you with a complicated matter like rolling over your 401k. But unfortunately, many of you who may be watching may not have an independent fiduciary advisor to help you with such matters. And we know exactly how complicated it can be and frustrating when you're trying to decide what to do with a 401k when you leave or retire from that particular job. Well, we don't want you to be frustrated. We always want you to be educated. And that is why I made this particular video today, to help those of you who are either leaving a job, and we know a lot of that is going on now, pending the outcomes of this pandemic. A lot of people have been laid off, and so we know many people have left their 401ks behind. So what we're going to do in this short educational video today is help you decide what to do with that 401k. Should you keep it where it is, or move it over into an IRA? So stay locked into this video. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and confusing retirement process simple.
Absolutely, Andrea. And we do this simply by utilizing a team of strategic partners ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals that will help us build a roadmap that will let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So Andrew, when it comes to a 401k and an IRA, those two particular retirement vehicles are very similar in some aspects. They both allow you to put pre-tax income in. They both allow for a tax deduction on your income. But deciding whether to take that 401k that you have and roll it over into an IRA is a very, very complicated decision. So we are going to talk about that and how you may go about thinking about whether you should do that or not. So you don't want to take that lightly, because there could be a reason to keep it there. There could be a reason to roll it over into an IRA. But what we like to do is just educate you so you can decide what's best for your particular situation. But before we get into that, we always share with you 2 goals for retirement income. And what are those 2 goals, Andrea?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So let's go ahead and dive into our lesson today about whether you should keep that 401k where it is, roll it over into another 401k, or roll it over into an IRA. So let's go ahead and talk about our lesson for today on whether you should take that 401k when you leave your job, or if you're fired from a job, or you retire, and roll that over into a traditional IRA. Now, I think it's very important for us, before we do this lesson, to talk about the comparisons first between a traditional 401k and a IRA. So when you're looking at these 2 types of retirement accounts, the maximum contribution limits for a 401k, as I've noted many times on other videos, is $19,500 or $26,000 if you're 50 and older for 2021. When we're talking about a traditional IRA, as you can see, the contribution limits are a lot less, $6,000 or $7,000 if you're 50 and older. Also, when you're talking about a penalty assessment to these types of accounts, they both will have a penalty assessed to them if you're under the age of 59 and a half. You can have a 10% penalty assessed to those funds. But there is an exemption or an exception to this rule when it comes to 401ks if you retire, called the Rule of 55. We did a video about this that can allow you to take money out of that 401k before 59 and a half and not receive that penalty. When it comes to IRAs, you also have a 10% penalty if you take money out before age 59 and a half. We also did a video about this as well. There are some qualified exceptions to this, depending on what you're going to be using those funds for, where you can avoid that 10% penalty. But both of these, in and of themselves, do have a 10% penalty assessment. Tax benefit. They both do have a tax benefit of where you can put in pre-tax funding. That means that you're going to get a tax income deduction from that account. You can do the exact same thing with a traditional IRA, just on a lesser amount. Do you have an option to take money out of these funds early? Well, with a 401k, you do have a loan option. So you can take a loan, as long as you're still working for that company, you can take a loan on that 401k. There is no loan option on a traditional IRA, so you don't have an option to really take that money out early and just to use it however you would like to use it. Funding options. With a 401k, of course, you're going to do that with an employer. And when you're looking at those funding options, your employer may actually do some matching inside of a 401k. You will not have any matching inside of a traditional IRA. So, of course, if you're no longer working with the company, there is no match. But if you're working for that company, you'll receive a match in a 401k. There is no matching inside of a traditional IRA. But here's another caveat to it. You can fund a traditional IRA or even a Roth IRA. If you have a non-working spouse, you can actually fund an IRA for that particular spouse. You cannot do that with a 401k. You can't just open up a separate 401k for your spouse if they're not working. RMD requirements. So that's required minimum distributions. A 401k, you are required to take it at age 72 unless you are still working for that employer. So if you're still working for the employer, you don't have to take those funds out, and they can continue to grow tax deferred as you're still working. Understand, once you retire, you will have to take those RMDs. There is no exception when it comes to a traditional IRA. So you have to think about that. If you roll that money over into a traditional IRA, that money, you have to start taking distributions out of that account at age 72. The tax income treatment. So let's talk about that. Anytime you take money out of a traditional 401k, you will have to pay ordinary income tax. The same holds true for a traditional IRA. So no matter which account you're utilizing, you're going to have to pay taxes at your ordinary income tax level on these accounts. So when you're thinking about if you should roll over your 401k into a traditional IRA, you have basically three options that you're going to have to think about. You're going to think about leaving that money at your old employer. If they allow it, they may not even allow it. They may say we need to move these funds along. You can also roll that 401k over into your new 401k. You have to check with your plan administrator and see if they allow that. Or you can also roll over the 401k into an IRA, which you potentially gives you all the control over those dollars at that time. So I really hope that this information today really shedded some light and some insight onto whether you should roll over that 401k into an IRA. Please remember that these videos are created for educational purposes only, and you should always consult with your own financial advisor, your own tax advisor, and attorney about your particular situation. And if you're looking for a fiduciary advisor to help you with these types of complex matters, please click on the link provided in the description below to learn how to become one of our high-value clients. For more information about this subject matter or any other topics that we've shared in our prior videos, feel free to reach out to our office or leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.